Hello investors, welcome to Investors Central. In this video, we are going to check the details of HDFC Focussed 30 Fund, Direct Plan Growth Option. This fund has benchmark as Nifty 500 TRI, which is Total Return Index. So before checking performance, portfolio and risk measures and summarizing the all the details, let us check the basic details first. Coming to the basic details of the fund, this fund is managed by Roshi Jain. And since this fund was incepted in 2013, since 2022, Roshi Jain is the fund manager of this fund. This fund has NAV of 238 rupees, and this fund is currently managing 13,136 crores. Above it is in millions. If we divided it by 10, we will get almost approximately 13,136 crores this fund is managing, which is a huge amount, huge AUM, assets under its management. So coming to the expense ratio is very low at 0.49, but due to this big AUM, the expense ratio is very low, I guess. This is actively managed fund, friends. If we see some index funds, their expense ratio is more than 0.5557 like that, but this actively managed 30 stock portfolio. This fund has only 30 stocks in its portfolio. This fund expense ratio is 0.49, which is extremely low, we can say, which is extremely low. So these are the basic details of this fund, and this fund has turnover ratio of 14% only. Turnover ratio means how many times the stocks will be changed in the portfolio. So out of its 100 stocks, normally there are 30 stocks only. Out of 100%, 14% only will be changed or changing. That is called turnover ratio. So turnover ratio is also very low. That means fund manager has huge conviction on the stocks they are holding. Let's go for the portfolio check. Friends, here we can see the complete portfolio of the HDFC Focussed 30 fund. So here they have this fund is holding stocks of 89.05%, bonds 2.03, cash, it may be in liquid assets, that is 8.92%. This is the asset allocation of this fund. And coming to the stocks, market cap wise, they are holding 57% giant companies, 24% large caps. So mostly this fund is into large only. Here we can see this fund is investing in large cap stocks. And coming to mid cap stocks, this fund is investing 16.25% in mid cap stocks, and 1.5% is invested in small cap stocks. So this is the asset allocation and market cap wise allocation of this fund. Coming to stocks, this fund is investing in ICICI Bank, HDFC, Axis Bank, and top 10 stocks holdings is 53.97%. And pharma is also there, Cipla, HCL Technologies, again Kotak Mahindra Bank, SBI Life Insurance Company, which is a financial service company, but not a bank, but into insurance. Bharti Airtel is there, State Bank of India. So mostly banks is there, friends. We will see financial services allocation is 45% in this fund. See, almost 50% allocation is given to financial services only, which I think there is more concentration in financial services sector. And technology 11.65, which is third highest, and consumer cyclical, so consumer stocks are there to 12.36% allocation. So here total number of stocks we can see only 32 stocks are there in this fund. Investments geographical wise, if we see, all the investments are in India only, that is Asia emerging. So this is the portfolio of this fund, friends. Let us see the performance of this fund now. Coming to performance of this fund, 3 months returns are 12.68 against benchmark, positive. 6 months also positive returns against the benchmark. 1 year also okay. 36% is given by benchmark, Benchmark means here we have seen above, that is Nifty 500 TRI is the benchmark for this fund. Here we can see it. So 3 years also this fund has able to beat the this fund is able to beat the benchmark. In 5 years period also the fund has beaten the benchmark. So this is the performance of this fund, friends. Year wise, if we see, in 2019 the fund is underperformed. 2020 also the fund is underperformed. Since 2021, here huge overperformance was shown by this fund. In 2023 also this fund is able to beat, means this is CAGR of the fund. Here we can see, which is compounded annual growth rate. Here we can see yearly performance in 2019, 2020, 21. This is fund performance, this is benchmark performance. Now let us see the risk measures. So overall, my opinion is this fund is able to beat the benchmark in all the time frames. If we see in terms of CAGR, which we need. So when the fund is not performing, we need to hold and hold our investments until it outperforms the benchmark. Now let us see the risk measures of this fund. This fund has alpha of 11.54, 3-year alpha. Alpha is performance against the benchmark, which is Nifty 500 TRI. Beta, this fund has risk lower than the benchmark. Risk, if 1 is there, the risk is same as benchmark. If beta is below 1, it is better, R squared, which is performance linked to its index. It is also normally 90% also will be there, R squared. For this fund it's 77.89 only, means they are not choosing what index is choosing. Their fund manager is taking his own calls in investing the amount of this fund. In information ratio above 1 or 0.5, more than 0.5 itself is considered as good. This fund has 1.74, which is extremely good. Tracking error, because of R squared is different, tracking error is also 6.18, which is more, it's not related to performance. So Sharpe ratio is 1.91 for this fund, friends. Sharpe ratio indicates risk adjusted returns given by this fund. For the risk taken by this fund, how much return is given is calculated by this Sharpe ratio. Standard deviation is low at 11.66, 3-year risk below average, 5-year risk above average. So this is the risk and return analysis of this fund. So this is complete details of HDFC Focussed 30 fund direct plan, friends. If you like this explanation, please do hit the like button, share and subscribe to our channel. Thank you very much for watching till the end. See you. Bye.